So the question at this point is whether or not this intermediate cycle bottomed last week, or whether we've got to come down and make an undercut. So by undercut, this is what I'm talking about here in February. First leg down, we get a bounce, and then a second leg down that undercuts that low, and then that's our final bottom. That's one way these intermediate cycles can bottom. Another way is just a volatile back and forth, up and down pattern. This is kind of what I'm talking about, although we wouldn't have this lower low. I'm kind of leaning towards this type of pattern playing out as opposed to the undercut for a couple of reasons. This bottom right here came on day 40 of this daily cycle. If we assume that this was the last daily cycle low, 40 days is actually a bit on the long side of a normal daily cycle. They can run long. We've seen daily cycles that'll run into 50 days, but they're not the norm by any chance. So a day 40 bottom would be typical, and for this to stretch and undercut would be a little out of the ordinary, but not completely impossible. So this scenario here is still on the table, but I'm leaning more towards this kind of a bottom where this ends up being our actual low, and we just have some violent chopping back and forth here as we put in the bottom. Couple other reasons, purely technical. At this bottom here, the stochastics and the TSI had not crossed back up on this bounce, which opened the possibility for the undercut, which is what we got. This bottom, a little bit different. The bounce has been stronger. TSI has crossed back to the upside, and stochastics has emerged from oversold. So that's what has me leaning more towards this kind of a bottom, one that does not break below this low of last week. And then next, let me move on to the McClellan oscillator. All right, so I think I've noted this before in some of my public videos. Very often, most of the time, at these intermediate cycle lows, you'll get a first leg down, some kind of bounce that brings the McClellan oscillator out of an extremely oversold position. And then if you get a second leg down where the market itself makes a lower low, an undercut, the McClellan oscillator will not confirm, and that's a pretty good sign that we're putting in an intermediate bottom. And so we've got the setup here already. We've got a very strong move in the McClellan oscillator out of that in that bounce. And if we were to undercut on the S&P, I don't think the McClellan oscillator would be even remotely close to taking out these lows here. So we would almost certainly have our divergence in breadth like we typically do at an intermediate cycle bottom. So I'll say again, I think this is another one of the dips that you should buy. Maybe this may be the last dip that you should buy, but I think you need to buy this dip the same as this dip was to be bought. This one, this one, this one, this one, all the way back to the beginning of the bull market. Every intermediate cycle low was a buying opportunity, and I think this one is as well. I'll say it again, markets, and another thing before I forget, dumb money sentiment got very bearish very quickly here. That's not generally, markets generally don't top from a right translated intermediate cycle. You can see this cycle rallied for a long time, and they also don't top with investors becoming extremely bearish very quickly. Typically, at a bull market top, retail traders, dumb money traders will stay bullish long after the market has topped, and clearly that is not the case right now. Retail dumb money confidence, the bottom completely dropped out, and traders became very bearish very quickly. Exactly the same thing that happened in February when I told traders this was not the beginning of a bear market at that point either. It just didn't fit the bill. As I said, bear markets don't generally top from a right translated cycle, and that's what this was. And bear markets don't start with people becoming extremely bearish very quickly. And that was, two big clues that this was not the start of a bear market. And, those same things are happening during this intermediate correction. So I feel fairly confident in saying that we still do not have a top to this bull market. And in our modern markets, central banks just are not going to stand on the sidelines and watch as everything collapses. So it's unlikely that a market would top like this anyway. Most of the time, central banks will, cut rates, inject QE. They'll fight the topping process. So most of the time now, markets top as a megaphone pattern. Let me widen this chart out and show you what I mean. All right, so you can see at the during the last bull market top, that's exactly what happened. As the housing market started to implode, the Fed began to fight the correction. They slashed interest rates, increased the money supply, and so you end up with this volatile back and forth pattern that's indicative of a market where the Fed is intervening and trying to stop the normal correction, and eventually the fundamentals overwhelm the market, and then we start down in a bear market. So to extrapolate to our current market, I think a topping pattern would look more like this. Let's say we do get our undercut and the S&P drops down to 2,600. I think the Fed would probably end its rate hiking cycle, and when that happens, then asset markets are going to explode higher, and I would expect the S&P would rocket launch back up, and make a higher high. Although unfortunately, I think the commodity markets would as well, and if we get oil over $100 a barrel, then we might have the catalyst for our next recession, and then that would be probably the fundamentals that would take the market down, and we would start moving down into that 4-year cycle low. So I just don't think that we're going to end this bull market with just all of a sudden a crash and it just keeps going. If we do undercut and if we do get 2,600, I think the rate hiking cycle probably stops, and then I think we get an explosive move back up to the upside, and I would look for our top sometime in 2019, and probably more of a megaphone topping pattern than just the top is in a crash. So I'll say again, I'm not sure at this point whether or not we do have an undercut, or whether we're just going to get a volatile back and forth basing pattern. But either way, I think this is another one of those dips you want to buy, and maybe this is the last one, but I do think you want to buy this dip.